Good morning. Happy Wednesday out there. The stock market is closed today in remembrance of the late President Bush. Rest in peace. So I thought I would make a quick video about a topic that's been pretty hot in the markets this year, and that is IPOs. IPO stands for Initial Public Offering, and it's when a company that was private offers some shares onto a public exchange. So it allows members of the public to buy in and become owners of companies that were previously private. And so it allows you to jump that very important line from being just a consumer to being an owner. So for instance, using an example that everyone knows of Apple, if you have an iPhone and you've had an iPhone and you will continue to buy iPhones or other Apple products, you're voting in the long-term strength of the company. You believe in the long-term strength of that company because you keep buying their products. So it really makes sense for you to consider jumping that line and becoming also an owner of that business. Because you're giving them a vote of confidence with your dollars and buying their products. Well, you should also consider being an owner. They have equity available to the public so that not only can you be a consumer, but you could be an owner. And, knowing that you believe in that company, that is really the main requisite for buying any stock, especially over the long term. If you believe that that company offers a great product that you're willing to buy, well, why wouldn't you want to own a piece of that pie, So, it's something that I think facilitates a lot of transparency. You get to learn about the inner workings of some of these companies when they make IPOs. And like I said, it allows you to straddle and jump over that important line from consumer to owner. So some of the big companies have IPO'd this year, like Spotify, for instance, a lot of people know. And even next year, Uber has said that it's planning to go public. Airbnb has said that it's planning to go public. So if these are companies that you use yourself and that you believe are going to be around for the foreseeable future, it makes sense to consider getting in some of these things pretty early. Amazon IPO'd, I think, at $17 or $20, something like that, and they're, as we know, one of the biggest companies in the world now, over $1,000 per share. You would have made a ton of money if you had gotten into that earlier than later. So it's a hot market right now for this stuff. These are, like I said, initial public offerings. Companies can also do what are called secondary offerings, which they offer more shares into the public to raise more money. Every time that they sell shares into a public exchange, whether it be an IPO or a secondary offering, when they sell the shares, they get that money in return. And a lot of times, it's better when a company says, well, we need this money for X. We need to build a new factory. We need to create a new distribution network or something along those lines. The market usually tends to favor those type of plans that are set out before these offerings occur. And especially in the case with the secondary offering, because what happens with the secondary offering is now you already have shares in the market, you've done your IPO, and when you do a secondary offering and you offer more shares into the market, well, you're diluting those original shareholders. So their shares that were there will become inherently less valuable. So it's even more important to have a plan for utilizing those funds when you do a secondary offering. So just a few things to think about, some topics that you may hear come up in the news or the financial world. So, something important to know, and keep your eye out for some of those big IPOs coming up next year. Have a great day, guys.